I think we're about at the right time where we can start. My name is Elias Masilela. I'm representing the African Impact Investing Group, and I'm hosting on behalf of the pioneers of today. I would like to welcome you all to today's webinar, which I think is going to be a significant part of changing the futures of the continent. I am sure that all the more than 500 people who are here are going to be part of making and remaking of history as we know it on the continent. In particular, I would like to thank the participants for showing interest in the subject of today, which I think is one of the most instrumental impact subjects that the continent can focus on, and that is the long-term scourge of the need to redomicile African capital. We may know that in excess of 60% of African pension funds assets are not domiciled on the continent. And that means we are going to engage with a subject that reverses something that has been a challenge for us for a long time. But before I go to the next section of the discussion and my brief thoughts about today, I think it's important to talk about the housekeeping for today. Firstly, would like to make the webinar as interactive as possible and to gain as much input as we can from the participants, both the speakers and those who are joining us as observers. Secondly, to make sure that everybody is included fully in the engagement, we have an option that allows for a translation of the discussions. If you look at the bottom of your screen, the second icon from the right-hand side has show captions. If you click on that, it will give you the options of the languages in which you can be able to engage with the webinar. And that allows full inclusion from all nations of the world. Having said that, I would then like to take this opportunity to thank, most importantly, the pioneers of today. And this is Mastercard Foundation and MEDA, to have journeyed us to this point where we can re-engineer Africa's flow of funds. And this is going to allow us to re-energize the African private sector, as was envisaged when the SDGs were established in New York, where it was understood that the SDGs were for Africa and they would have to be delivered for Africa, led by Africans. And I think this is a very important part of today, to make sure that the engagement takes place at the private sector level. If one would think about the future of what is going to be seen as historic today, is that this initiative that has been driven by these two institutions is something that is nothing less than a final push for the success of the SDGs on the African continent. Having said that, I would then like to introduce Dorothy, who is the president and CEO of MEDA, who is going to take us through what their thinking was to where we are today and how they see themselves influencing the continent and the flow of capital going forward. Dorothy, over to you.
Well, thank you very much, Elias, for that introduction. Good evening, good afternoon, good morning, distinguished guests, wherever you're calling in from, allies of Africa's investment ecosystem. It is indeed a pleasure on my part to welcome you to this webinar today as we release the full report of Africa as a jurisdiction for domiciliation of investment vehicles study. This is following the launch of the executive summary of the same that we did in December 2024, 9 months ago at Super Return in Cape Town. We're here today to explore how to unlock capital flows for Africa and keep investment vehicles on the continent. We know that more than 60% of African investment vehicles today are domiciled outside of Africa, and it is time that we reverse that trend. This report is not just another publication. To us, this report is the call for action. So a few points on why must we act and why must we act now? So let's look at the opportunity cost of not doing anything. And I know that there are many, that the panelists are going to talk about, but I'm just going to list a few. The cost of distance, what it means if we continue to domicile offshore, and what that drains from Africa. So number one, I'll say jobs, fees, tax receipts that are not captured on the African continent. And I'll give the example of Luxembourg, right? Luxembourg is a great country. Anybody who listens to me know I always use that example. They're a great country. But Luxembourg, as of 2023, 2024, 30% of the GDP of Luxembourg, 11% of jobs in Luxembourg, 20% of direct tax revenues in Luxembourg comes from domiciliation. So domiciliation is something that, if we can do it in Africa, can bring growth to the African continent. The other thing that I want to talk about, and I said there are many, but I'll touch only on 3, is the legal spend that migrates for arbitration. We know that most of the legal issues when it comes to fund management, even on the African continent, they get arbitrated in either London or Paris. 17% of those arbitrations, it's increased, are coming from Africa. So think about it, if we can create jurisdictions on our continent that can do some of these things. The third one that I want to touch on, which is really, really important, is just the broader flight of capital. UNCTAD, UNCTAD, estimates that 88.6 billion leaves Africa annually, generally as illicit financial flows. But some of these, when we domicile our funds and we create jobs in other parts of the world, taxes, and build ecosystems elsewhere, it might not be illicit, but it is part of that $88.6 billion that is leaving the continent. So I say so because our commitment to this work is followed through the learnings we've had over the past 3 years. Now we're in year 4 of the Mastercard Foundation African Growth Fund. And we have seen firsthand the opportunities and the barriers that exist for investment vehicles, and recognize that we need to create systems, structures, and that space on the continent that would allow the investment vehicles in Africa to flourish, and for other investment vehicles to come to Africa and they can flourish. Today, you're going to hear more about the study from MAME, where they consulted widely with more than 170 regulators, fund managers, investors, policymakers, as we get to the bottom of this. As I said at the beginning, this report is not just another report, it is a call to action. For us, the message is clear. Africa has the potential to become a hub for domiciliation, and it has started. But this requires targeted reforms, stronger regulatory environments, more efficient fund administration services, and the greater ability to mobilize domestic capital. We know that if we do this right, domiciliation can lower the cost to set up funds. It will keep value within African economies and unlock capital for women and youth-focused enterprises. I just want to repeat that again. If we can get domiciliation right, it will keep value within the African economies, and it will help to unlock capital for the youth of the continent, which is what we all want to do. So our webinar is, again, not just a release. We hope that today, as you join us, many of you working in your own way, in your own countries, the flow of money and your priorities are all different. We really hope that this domiciliation study, and as we go out there to implement it, it is beyond the Mastercard Foundation African Growth Fund. It is about the African Free Trade Zone. It is about infrastructure building on the continent. It is about having money meant for the continent, domiciling on the continent. So today, this is really about the building blocks for a system beyond the fund. Let us begin to think and do the things that will start to domicile money onshore in Africa. Domiciliation is now clear. We need to work on it, and we believe that we can do it. So thank you all for being here, and I look forward to the engaging conversation from our panelists and to be able to come back at the end, for us to conclude this. So passing it back to you, Elias, for the next steps. So Elias, over to you.
Thanks a lot, Dorothy. That was very clear and strictly instructive, and I'm sure that we'll all draw from that. And as I prepare to hand over to Mame, who's going to share with us, as you've said, the overview of the report, I have no doubt that we're going to get a lot of learnings from that. Mame, you have the floor.
Thank you, Elias. Thank you very much. It's my privilege to share with you insights from the domiciliation report. Because as Dorothy said, this is more than the release of the report or a discussion of findings of a study. It's about us seizing a continental opportunity to unlock capital, empower micro, small and medium enterprises, and shape Africa's financial future together. All right, so I can take the second slide, yes. Last year, we released the executive summary of the report at the Super Return Africa conference, and today, we are excited to release the full report after many months of work engaging stakeholders. Thank you all. This will be followed by a series of ecosystem engagement activities over the next 2 months to 3 years, building momentum and driving impact. We look forward to sharing an update on the progress at this year's Super Return Africa conference. You will agree with me that domiciling investment vehicles in Africa is about keeping capital closer to where it's needed most, right? But also helping MSMEs grow, creating jobs, empowering the continent's future is the icing on the cake. By building strong homegrown ecosystems, we unlock new flows of local and global investment capital and make our economies more resilient, inclusive, and ready to grow. We are happy to share that there have been some recent shifts that are reshaping the domiciliation ecosystem. Progress towards policy and regulatory reforms, capital raising shift to mobilizing local capital pools, engaging better with local institutional investors like pension funds, and also there's some innovative local fund structures that are coming up. These interventions are having the effect of raising investor confidence in local investment ecosystems. But in spite of these positives, there's still some work for us to do because close to 60% of funds investing in Africa are domiciled outside of Africa. We need to work together harder to improve investor familiarity and reduce the risk perception about Africa by having domiciliation-friendly policies and advocacy across African countries. So this slide shows highlights of key developments in some jurisdictions, and this reflects the strong commitment of African countries to position themselves as competitive fund domiciles. While significant effort is still required, the momentum underway shows the exciting prospects that domiciliation holds for the continent's investment. So for you that have not had the chance to read the executive summary, we developed a fund domiciliation maturity diagnostic tool for the study to compare the maturity levels of the 13 jurisdictions that we covered. This formed the basis for the heat map that you see here. And this shows the comparative maturity of the 13 countries. In the final analysis, we concluded that there are viable opportunities in all the countries, whether it is for local capital mobilization or attractiveness for foreign capital, or their regional collaboration opportunities. The report outlines the inherent strength and potential of investment vehicle domiciliation in all these African jurisdictions to mobilize investment capital. In the report, drawing on our in-country stakeholder consultation and maturity analysis, we provide targeted recommendations for each of the stakeholder groups, the national policymakers, the regulators, fund managers and investors, ecosystem builders, and international DFIs. These are designed to advance domiciliation ecosystems and strengthen jurisdictional maturity across Africa. We also made country-specific recommendations for each of the 13 countries. The details can be found in the report. Overall, the report maps a path forward towards the domiciliation of investment vehicles in Africa, and it aims to motivate and guide ecosystem stakeholders in taking action towards unlocking the potential of African jurisdictions as attractive destinations for investment vehicle domiciliation. This report is intended to spark solutions-oriented dialogue and collaboration among key investment stakeholders. Over the next 3 years, we will engage stakeholders through in-country roundtables, webinars, and one-on-one discussions, some of which will be with Elizabeth Howard and her team at the Africa Crowdfunding Association. I'm sure some of you are familiar with their work. Together, we will all explore opportunities for capital raising and innovative mechanisms tailored to MSMEs. Ultimately, our goal is not only to strengthen domiciliation opportunities across the continent, but also to unlock greater access to capital for youth and women-focused enterprises that need it the most. So by anchoring investment vehicles in Africa, we not only unlock capital, but we also empower youth and women entrepreneurs to drive the continent's next chapter of inclusive growth. Please download the report, dig in, and let's start the conversation. Thank you very much for your time and attention. Over to you, Elias.
Thank you very much, Mame. This was sharp, focused, and very intentional. And thank you very much. It's going to get a lot of people engaging with it. It's a very important part of reversing what we call the original sin on the African continent. And before I hand over to the panel, which is going to get us through a more detailed engagement on the findings of the study, would like to get the audience engaged a bit. We're going to have a very brief Zoom poll, which is going to give us a sense of what we are coming into this discussion with as participants. Can the poll be put up? The poll is just one question. And the question is, which factor most affects domiciliation in Africa? And you can only have one option. Let's see what the audience thinks. Will the results show automatically? Ne? The leading answer is investor confidence and familiarity with African jurisdictions. So it's a function of what we do as Africa for us to get this right. We can't blame it on the rest of the world. The next one is regulatory complexity. And I think reconciling and aligning policy across the continent is going to be one of our key considerations going forward. Would be happy for the panel to also give their comments on this when we get to the panel. And fortunately, I'm not going to be the moderator of the panel. I will allow Diana to lead us directly to the panel discussion, where we'll get an opportunity to deal with the detail of the content. Diana, over to you.
Thank you so much, Elias. And it's my honor and pleasure to be moderating the panel. I'm Diana Smallridge, one of the authors of the study with our fantastic collaborative. Let me just jump right in and note that there has been in the chat the link to the report, so please feel free to download. And I know there have been some questions already as to whether there'll be a recording, and absolutely that will be made available. So you're not expected to absorb all this at once. So let me take the opportunity to indeed introduce our impressive panel. I'm going to start with Mercy Mutua, who's head of Access to Finance of Mastercard Foundation, coming to this topic with her dual purpose of both the head of Access to Finance at Mastercard Foundation and the architect of the Africa Growth Fund. And I think, as noted, her everybody's bios or LinkedIn will be in the chat. Kofi Fynn, who is Managing Director of Petra Trust, a leading diversified financial services institution in Ghana with activities across many of the fund administration issues and pension trusteeship. Next, Wale Adeosun, who's founder and managing partner of Kuramo Capital, bringing a private equity perspective from across many African jurisdictions. Iyinoluwa Aboyeji, who's founding partner of Future Africa. He represents the next generation of African fund managers with insights into how emerging fund managers navigate domiciliation choices. And finally, Jean-Marie Kananura, Chief Investment Officer of Rwanda Finance Limited. So let me, before we get into the questions to all of you, I just want to start with you, Mercy. You understand both the funding and policy side of the African investment ecosystem, and really, as you are LP to the Africa Growth Fund, you're walking the talk on African domiciliation, and I think it would be really helpful for the audience to hear what motivated you to take that step. And what lessons have you learned along the way? And then I'm going to pass it all over to the other panelists to go deeper.
Thank you so much, Diana. I'm extremely happy and very humbled to be part of this important discussion on our ecosystem that's also very close to my heart. Happy to share our experience. I mean, we've had numerous, through this experience, a lot of things that we could share, but I'll just focus on one thing that has come out very strongly. as an LP of this fund of funds. But a bit of context about the Mastercard Foundation. Our mission is to really advance education and financial inclusion as clear pathways to poverty alleviation in the continent. And to deliver this, we focus on two strategic pillars. One is the workforce development, and the other is entrepreneurship, and our Young Africa Work strategy, which aims to enable 30 million young people, 70% of which are young women, to access dignified and fulfilling work by 2030. Now, within the entrepreneurship pillar, we work on both the demand side, that is supporting inclusive entrepreneurship, with a particular focus on young entrepreneurs and especially young women. And then on the supply side, where this fund of funds comes into play, where we aim to unlock inclusive capital for those entrepreneurs, majority of which are excluded from the mainstream finance. Now, why did we choose African domiciliation as a key investment consideration for the fund of funds? And this was very deliberate, and we prioritized investing in what we call investment vehicles, again, or funds, but we prefer to use terminology, the terminology investment vehicles. So why did we choose this as a key consideration? And our motivation was very, very clear. And one of the things that I wanted about that. So I was explaining this sort of structural issue that we have to deal with, where on one hand, we have the SME financing gap in the continent of about $330 billion. And on the other hand, we have $2 trillion in assets that are held by institutional investors collectively. And these are pension funds, insurance companies, sovereign wealth funds, banks. And, they have the question is, how do we bridge this gap? Because the capital held by these institutional investors is invested in very low risk instruments, like the government treasuries. And yes, the securities, these securities provide their stabilities to investors, but their contribution to enterprise growth, job creation, and what we call long-term economic transformation can be enhanced, and enhanced very significantly if we can channel a portion of this to entrepreneurship. And this So this structural mismatch is what we're trying to deal with here. Large pools of capital on one side and underfunding entrepreneurs on the other side. But yes, it is a big challenge, but also a major opportunity cost for African development. So by investing in African domiciled investment vehicles or funds, the fund of funds aims to influence the unlocking of domestic capital towards entrepreneurship, and especially for those marginalized entrepreneurs that cannot access mainstream financing. And most important, demonstrate to investors that are most likely to back these funds, that especially the local investors who we know they will be able to back these funds because they can see them, because they are domiciled in the continent, they understand them and then trust them. We all know the principles that reflect well-established concept of home bias in finance, and that's what we're trying to demonstrate here. So if you've unlocked even a fraction of this capital, say 10%, we're talking about $200 billion. This would materially reduce the financing gap and fuel MSMEs, and we all know these MSMEs remain the lifeblood of job creation in Africa. So quickly wrapping up, Diana, let's look at the US as an example. Majority of the funds in the US are domiciled domestically, with very few offshore, and those few that are domiciled offshore is just to attract foreign capital. For Africa, it's by contrast, that's the reverse, and Dorothy talked about it. More than 70% of pension capital outside the continent. That's something that we need to reverse. So you can see in the US, when this money is domiciled in their country, you find US investors then invest at home. They recycle capital within the US enterprise and strengthen the ecosystem in general. And this is a self-reinforcing cycle that Africa needs to replicate. So unlocking domestic capital is a double win. There's no question about it. On one hand, you unlock financing, but on the other hand, through domiciliation, you strengthen the wider ecosystem. And, this was touched upon. You diversify domiciliation hubs. Mauritius right now is the key domiciliation hub in the continent. I believe it's about 60% of the IVs are domiciled in Mauritius, but they're emerging, domiciliation. South Africa is very strong. Morocco, Ghana, and Rwanda are coming very strong. So this helps reduce the concentration risk. Then you're building professional expertise. You heard about the legal expertise, administrative, accounting, foreign services. This really helps to spur up a very robust financial infrastructure. And lastly, Dorothy touched on it, it's retaining and recycling value within African economies. So there's a lot happening, a lot we're learning, but one of the key things we're learning, Diana, is it's possible. and it's catalytic because we're doing it through the fund of funds. It has its challenges, yes, but it's something that we all need to sign up to. So for us, domiciliation, as a foundation, is not just a legal formality. It's about credibility, it's about inclusion, it's about retention of value within the continent, and it's about building the investment ecosystem in the continent. So through the fund of funds, we're sending a very clear signal of confidence and commitment to strengthening Africa's investment ecosystem. And by perpetuating this cycle, it will attract both international and domestic capital. And we know that we need this capital for our enterprises, and most of those ones that are operated and founded by our youth. That's a perspective we've seen by investing in the fund of funds, and looking forward to hearing more from the others as we continue to address this issue. So thank you. Back to you, Diana.
Wonderful. Thank you so much, Mercy. Really about opportunity, and we'll talk about challenges as well. Let me go to our other panelists to really give a current state assessment. How do you see the issue of domiciliation? Kofi, perhaps I can start with you. Ghana's been working to position itself as a financial hub. What are some of the practical challenges you've encountered that maybe the recommendations from the study could address? And if you could think about that from the domiciliation decisions that you see are being made. So over to you, and you'll have to pull off mute so we can hear you.
Can you hear me?
Yes.
Good morning, good afternoon, good evening, wherever you are. And thanks for having me. Diane, thanks for the question. I think when you look at the recommendations of the study, they imply that any success in increasing domiciliation, which I believe is required for any jurisdiction to consider itself a financial hub, requires sustained coordinated effort by government and policymakers. I don't think this can be done by one ministry or agency alone. Practically, there has to be a concerted effort by power at the highest level to create this change in a way that is really effective and sustainable. So in Ghana's case, if this country wants to become successful as a financial hub, at least the Ministry of Finance and its agencies, the Ministry of Justice, the Judiciary, and the Trade Industry or Trade Ministry, which has in Ghana oversight of investment promotion, needs to make this a high priority. So I know we have objectives and goals to be a financial hub, but if we're going to be successful, this has to be championed at the highest levels of government, and it has to be a national strategy, just like the examples of Mauritius and Luxembourg have been, where they have succeeded because these are national strategies.
Right. So top level support, political will, and that's absolutely critical.
I believe.
Yeah. Wale, maybe a question to you. Nigeria is obviously the largest economy, significant player, but there are undoubtedly some regulatory complexities. And how do you, when you're making decisions, weigh the domestic market access against operational efficiency in your domiciliation choices? And maybe then you could talk a little bit about local pension funds and institutional capital in Nigeria, because certainly those are significant pools of capital.
Thank you, Diana, and thank you for inviting me to this session. It's a very important one. First, let me commend Mastercard Foundation and MEDA for leading this effort. It reminds me of an effort we did when we started Kuramo Capital, which was to we wrote a report on the private equity ecosystem. And at the time we were about to start, about 15 years ago, most of the fund managers were not local, were not indigenous, and were not focused on smaller size businesses at the time. And so we made it an initiative that we were going to focus on indigenous local managers on the ground. So if you think about the private equity ecosystem and the continuum, we raise capital, and then we invest the capital in businesses, but in between is the infrastructure, and then you have the underlying businesses that we invest in. So the underlying businesses are local, they're on the ground, and that's the focus on indigenous groups. The fund managers are local, and that was an initiative we took. But the infrastructure, the pipe that connects the capital to the from the fund managers to the indigenous companies was never really fully local. And I think that's what this effort is trying to do, which is really to increase the numbers of indigenous administrators and domiciliation on the continent. And I think that is a really great initiative. And I believe it follows through the continuum I described earlier. As to what we're seeing on the ground, we're starting to see local pension funds now mandate local domiciliation. We have recently won 3 mandates, 2 in Nigeria and 1 in Ethiopia, where the requirement has been that the funds be domiciled locally on the ground. And I think we all agree on all the benefits of local domiciliation, right, that everybody has talked about so far. And so the continuation of really focusing on the infrastructure and the, I guess, the mandate by local pools of capital, I think will really spearhead this initiative. Thank you.
Fantastic. I love your description. I think that's very, very helpful and gives an overview of the concepts we're discussing. Let me turn to you, E. As a fund manager, how did domiciliation costs and complexity compare to some of the other startup challenges you face? And I really want to pinpoint the question of what would make you confident to be an adopter of an improved domiciliation options across the continent?
Thank you very much, Diana. And I definitely want to commend the MEDA and Mastercard for this report. I think it's an important step in the path of making sure that we can build capital stacks that work for Africa. For us as an emerging fund manager, the biggest factor is actually ease of setup. And we try to experiment with a number of jurisdictions, including Mauritius and Cayman and others. And it just turned out that being a Delaware fund was just easier and cheaper than anything else. The expertise was readily available. In fact, there was standard documentation and platforms that would help you to be able to develop these very quickly. You weren't quite mucking around in terms of your service providers. There was a rich ecosystem of fund administrators, accountants, legal professionals, auditors that could work with you. There was a lot of clarity from investors and comfort with investors, particularly in terms of where the funds would be domiciled. There were significant concerns around the funds being domiciled in an African bank, which concerns which I don't think will go away immediately. And of course, the most important thing is the source of capital, right? At the end of the day, he who pays the piper dictates the tune. And for a fund like ours, which until hopefully soon enough, most of our capital so far has come from the US. And so they did, to make things easy and to also be able to fulfill the comfort requirements of our investors, we had to domicile in the US. That said, I think for us, we've invested in and dream of a day when we can domicile on the ground. But there has to be, like Mr. Kofi mentioned, an all of government and all of industry as well, effort to engage. And not to engage on a broad speculative basis, but on the basis of interventions that are plausible and that make practical sense. And in fact, for us, one of our largest investments as a fund has been in a jurisdiction called Itono, FZE, where we are actually building the fund domiciliation environment we want to see. We're working very closely with the Securities and Exchange Commission of Nigeria. And the president put together a digital free zone committee that's supposed to look into how this can be a jurisdiction for fund domiciliation. And as we've gone through this process, we've seen some very practical challenges that we are trying to resolve, which I can get into a bit later. But the most important thing really is for us to coalesce on one effort and try to build not just the funding support, but the ecosystem around the fund domiciliation locally. Because if you, and also be willing to make some compromises. For example, I think until such a time as we can have significant flows on the continent, it's going to be challenging to have foreign capital domicile their capital on the continent. So one has to be able to make common sense and transparent compromises, perhaps at first domiciling and custodying elsewhere before we then bring the custody onshore, or doing all of this in the free zones where people are guaranteed some general protections in terms of repatriation of capital, rule of law, and arbitration. So those are some of my thoughts.
Very helpful, from your perspective. And really, if we think about trying to unlock capital from the continent, that becomes a very strong value proposition to be doing the things that need to be put in place for African-based investors. I'm going to next ask you, Jean-Marie, if you would, if you could. Otherwise, I want to note right now that there are Q&As. There's a little button at the bottom of your screen. So I'll be curating a Q&A session after the panelists. So just to everybody watching, please put your questions to us. And in the meantime, Jean-Marie, let me just ask you, Rwanda has done some amazing things, significant strides with Kigali International Financial Center. And maybe from your perspective, I'd love to hear what kind of experience could be replicated across other African jurisdictions. What have you learned? What would you advise?
Thank you very much, Diana, and good evening, good morning to everyone. It's a pleasure to be here, and I also want to thank MEDA and Mastercard Foundation for conducting this very important study. For us, it was very important that to showcase what we've been able to do. As you mentioned, we are trying to really to position Rwanda as a gateway for investors looking for looking at to access Africa, and we've done a lot of work in the past because we started like a 2020, so it's quite a young jurisdiction, but it's already, I would say, it's a baby that is already running. It's not like a toddler, so we're already up and running. So we started in 2020, and so far we have already close to 300 investment vehicles already domiciled in Rwanda, including some, private equity, VC, holding companies, impact investors that are structuring different type of investment vehicles to raise money, but also to invest in Africa, on the continent, through investment vehicles that are kind of domiciled in Rwanda. So for us, this is a very important discussion, and we are glad that to be featured on this study. So briefly, I think what we've learned, and I think something that maybe Kofi mentioned earlier, is to be able to position a financial hub. You really need to work as it's a teamwork, right? You need to pool all resources as a country together to bring, we need to bring private and private sector together to be able to, for example, to craft the reforms that are needed. In our case, we, in the last 5 years, but actually in 4 years, we had to review close to 22 laws and regulations. You can't do that without supporting government, basically, from the Ministry of Finance, from even high office to regulators to parliament. Everyone has to be, has to share, I would say, the same vision. So there's a lot of work to be done in the background to kind of have buy-in from the whole ecosystem. So that's I would say rule number one. Second, you need to be fast. We need to, you need to move fast. You need to coordinate. As I said, within 3 years, 4 years, we passed 22 laws, including laws on, to facilitate fund structure, because this is what we are talking about here. For example, we have the law we have partnership law, we have trust law, we have foundation law. So a different type of laws were passed to make sure that we can accommodate, those investment vehicles that we want now to be domiciled here in Rwanda. And we also, and I'm going to something that I think the panelists mentioned, you need to have, I would say, clarity, right? In terms of framework, what you're putting in place. Is it something that is going to last forever? Is it something that is there for 2 years? So investors need clarity to make sure that you get kind of confidence, right? And this is something we were able to achieve in a sense. For example, we also try to kind of to speed up the process, right? We have created one-stop center whereby you can come and you have all information in one place. So from how to create the company to information on the regulation to tax, even the immigration officer is sitting at the same office. So and I think I think something also that was mentioned, you need to build an ecosystem of professionals. So from service providers, I think the previous moderator was talking about, if you go to I would say well-established jurisdiction, you have an ecosystem of service providers, from law firms to fund admin to accountant. This is something also that we've been able to put in place. We have now service providers coming from well-established jurisdiction, from Mauritius, from even global brand or global fund admin are now setting up shops in Rwanda to be able to provide, I would say, world-class service to our investors, because investors need familiarity, and I think that's maybe that we talk about it a bit later. One of the challenge is that they need to know, if I'm coming to a new jurisdiction, what I'm going to find there. Do we have the same type of laws, same type of legal entities that I can that can be incorporated in that country? Do we have the same level of services? Do we have service providers that I'm familiar with? And this is something that we've been able to achieve in the last 5 years, and we are quite proud to have those, I would say now, legal advisors, tax advisors, as well as fund administrators that are coming from even advanced countries like Luxembourg to start operating from Rwanda. Yeah, thank you.
Great, Jean-Marie. It really is a ecosystem development. There are many pieces of the system that need focus, and it sounds like KIFC has really seen the extent to which these pieces of the puzzle have to all be developed. Mercy, I might just ask you one last roundup of this portion of our discussion. For you, even as a champion of domiciliation in Africa, what are some of the barriers you still encounter, and how have you navigated them?
Thanks, Diana. Obviously, this is a long-term play, and we're still navigating a lot of the barriers. Apologies for that. Yeah, but I would say some of them are regulatory confidence. You heard about the regulation environment, and there's still a lot of work to be done around regulation, because then with lack of predictability really around regulation, this undermines investor confidence. And part of how we can navigate this is having what the discussions similar to what we're having today, really, and engage with different stakeholders to see what it is that we can do together. And of course, working very closely with the government, as you've had it mentioned. And then there's the element of cost, of course, and the maturity of the ecosystem. I think generally the study tells us it's about 20 to 30% cheaper to domicile in the continent, but the jury is still out there. We know it's also expensive to domicile offshore, and in the longer term, we'd expect it to be cheaper to domicile onshore. But as I say, the jury is still out there. But and the reason is because some of these costs, especially around the service providers, the lawyers you heard about, the auditors, then would come down, because this is where you're doing the business. This is where the investments are being done. So if you domicile here, then you're able to have those economies of scale by accessing these services. So the maturity of the ecosystem is lagging behind, but if we work together to develop that, then you will see the costs coming down. So the last one is really around investor familiarity and inertia. I think you've just heard Jean-Marie speak about it. And that familiarity, at least within the continent, the investors are more familiar with Mauritius, where you'll find perhaps around 80% of their IVs invested in the continent being choosing Mauritius as an investment destination. And it's just that familiarity. So how do we navigate that is through the fund of funds, trying to help de-risk, this journey, providing working capital to the investment managers to help with parallel or dual registrations, which is costly, but it helps, to settle the ecosystem even as we, get to understanding better as an investor. And then lastly, really, Dana, is around even as we speak about international capital and the domestic capital, they both need a lot of confidence in the ecosystem, confidence in the regulations, confidence in where they're putting their money. And that's something that we need to work together to build. And it's something that we've been grappling with. So the parallel systems have been a cost, but we've seen them working. We've seen LPs coming along and trying to test this out through the parallel system, but we need to bring those costs down. And I must say maybe a bit of tension, in the sense, and tension is good, it's not necessarily a bad thing, in the sense that a lot of our investment vehicles are still getting money, external money. And as he put it very well, he who pays the piper calls the tune. So if you're relying on external capital, then you're bound then to domicile externally. And that's why I keep on emphasizing unlocking domestic capital then is going to really start helping us balance the equation out, because it's really not a competition. It's about options. It's about balancing. It's about retaining capital in the continent and value. And it's about both the international and domestic capital, coming together and having that blend of capital that can really help our continent, especially around entrepreneurship, and more so addressing the investment gap for the youth that are not able to get mainstream capital. So domiciliation, again, as I say, it's more than a liquid choice. It's how we build confidence in the Africans' market and Africans' future. Thanks, Diana.
Thanks, Mercy. I want to acknowledge, I know you need to leave soon.
Yes, I do.
What's your closing word? And as you're speaking, can I ask the technical team to put our second poll up, the Zoom poll?
Yes. I think the biggest my closing words would just be three quick things. One is, how can we very quickly swing into action on the back of this report with a few select jurisdictions that have already shown a commitment and have regulatory support? the incredible work that Rwanda is doing, the incredible work that Nigeria is trying to do with Eternal, and then leverage them as centers of excellence. Leverage them to basically show that these things are possible. Because my understanding of Africa is that once something is done, everybody then scrambles to get it done. I remember when we were trying to do the Startup Act, a lot of people said it wasn't possible, government wouldn't bend, so on and so forth. But once a few countries did it, Tunisia, Senegal, Nigeria, now every country on the continent wants to do it. So I think we shouldn't underestimate the domino effect, looking for consensus across the board before just taking one or two really big examples would be good. Second of all, I think it's really important for local capital or committed capital like Mastercard, like the fund, and local capital to lead on this effort, because definitely, like I said, he who pays the piper dictates the tune. Many emerging managers would be happy to change their domicile if they knew that they weren't going to be losing out on the capital front. And now is the perfect time to do it, with the current environment being what it is right now. And then I would say finally, and most importantly, it's important to invest in the ecosystem. And investing in the ecosystem at this level means that we have to invest in best-in-class education of the professionals in the industry. I find that a lot of the African lawyers in particular can't tell you very much about alternative domiciliation, or even about many of the benefits that African governments have already accrued to startups, or properly advise on many of these transactions in a way, and specifically as it pertains to startups and for emerging management and things like that. I think it's really important that we start to build capacity for fund management on the continent, for fund accounting on the continent. There needs to be a concerted effort to doing that and engaging the lawyers, the accountants, the professional services organizations to be able to do that. I think if we start with those three over the next 2 years, and you have one or two big success stories like we have in Rwanda and soon in Nigeria, you will definitely not need to have a webinar like this again.
Thank you so much, E. And speaking of African lawyers, as you depart, we will have our own African lawyer join the panel to take the Q&As. We've got a whole lot of questions coming in from the audience, so I'm going to really have to curate them. And I'm wondering, do we have answers from the poll too that we can just reflect on, if those are available? Can the technical team put them up? Aha. So strongest is over 50% of you say political commitment and policy reform. So that's a very important conclusion to be making this message to the policymakers. Streamlining regulatory approvals, and certainly E spoke about that, of the ease of doing business as a fund manager in Delaware. And then building the capacity of the profession, the professional support, legal, fund admin compliance, and then equally regional integration and cross-country collaboration. So I'm going to start taking the questions from the audience. As I say, there's more than we can answer, and I'd love to have Mame be pinned to the panel to join and be available to answer the questions. There she is. Let me start with you, Jean-Marie. The question is, how can African countries balance investor protection with reducing over-regulation that increases the cost for fund managers? So let me repeat that. How can African countries balance investor protection? So really thinking about the investor side, but reducing overregulation that increases the cost for fund managers. So it's really putting in the balance the investor's interests and the fund manager's interests, and how to support both.
Okay, that's a very tricky question.
Sorry, I didn't ask it. Someone from the audience is putting you on the spot, but
yeah, I see. So one of our first, I would say, value proposition, and it's something that we are very intentional to kind of implement, is compliance and transparency as a jurisdiction. So we've done a lot of policy reforms, a lot of new requirements to make sure that we comply with international standards. Because as I mentioned, our end goal really is to attract foreign capital to be domiciled on the continent. And as you all know, compliance has been very, and the regulatory framework has been very, I would say, more strict in the last decades. And for that, when we started, we had to kind of comply. So in terms of AML, CFT, in terms of OECD, there are a number of regulation initiatives that we took to make sure that we comply with international standard. And that, of course, sometimes comes with certain, I would say, costs, maybe, which is what that was not in the market. For example, I can mention, probably that when we started maybe 5 years ago, we were able, for example, to register a company within 5-6 hours in Rwanda. And you could then do that online, just log in, create a profile, and that's it. And then you receive your incorporation certificate. But now we have, for example, included what we call ultimate beneficial ownership that you have to declare, right? So you need to, and we also want to, as I said, we are building an ecosystem of service providers that you requested to go through to kind of, to hire and then use them to be able to create the company, to go apply for license, and all of this process is normally should be handled by the service provider, which obviously increase a little bit the price. Though we are still as a country, we are still very, very affordable, very cheap compared to the rest of the continent or to the rest of well-established jurisdiction. So I would say it's very important that we don't compromise. We have put in place a robust framework to protect jurisdiction, but as well as to protect investors. So for us, it goes hand in hand.
Great response, Jean-Marie. Let me ask a question to both Kofi and Wale together. Imagine you're a first-time fund, you're navigating the whole question of fund domiciliation as one of the big tasks. For funds led by Africans shuttling between the diaspora and Africa, how can an emerging manager navigate this choice of domicile while also working towards raising their first fund, given the time and pressure it takes to close? Any insights there? Wale, maybe I'll start with you.
Sure. First-time fund manager navigating
the choice of fund domiciliation.
Choice of fund domiciliation.
And you're thinking you've got diaspora investors, you've got African investors. How to navigate that when you're trying to raise funds? What is the sort of fastest route to close?
Yeah, I mean, I think, look, for now, there's no doubt that Delaware is a fast way to really register your fund real quickly, or Mauritius, if you're going to obviously have local investors as well. Those are two choices, and they're quick. and they've been around for a long time. So I would say the tendency for a first-time fund manager is to move in that direction, just because of the need for this first-time close and to close real quickly. However, though, I think we're raising a fund 4 right now, Kuramo Capital, that's going to be domiciled in Nigeria. So I wondered, but I would say that our first few funds were Delaware and Cayman, and as well as Mauritius as well. But now we're moving in the direction of local pension funds in terms of providing capital to the fund, and we're domiciling in Nigeria. So I think it's going to be a function of, I guess, how long you've been in the business. And for first-time fund managers, it's just so easy right now. So the goal for all of us, obviously, is to figure ways to make it just as easy for them to domicile in Rwanda or in Nigeria. Looks like Rwanda is ahead of everybody on the continent right now, and between Ghana and Nigeria following. And there is work being done. And I think people are seeing actually the domiciliation as a business to actually invest in and bring global best practices. I think we have examples, right? So, for example, some of the local pension funds are all domiciled locally, really. What's different is the fact that if you're investing across countries, that collaboration that's necessary is what needs to come into play, and the harmonization of laws. So I feel like we have the ingredients to get this started. But to your question right now, I think it'll be very difficult for a fund manager to do otherwise than what's established. Thank you.
Thanks, Wale. Kofi, anything more on your side?
Just to add that, the question actually posited this challenge for somebody who is trying to raise capital internationally, right? And doing it in one of the jurisdictions that Wale mentioned just takes away a number of questions, just answers them, right? And makes it easier for you to set up. But if, for example, you are looking for capital from a Ghanaian pension fund, which we are, you will have to have a local vehicle in Ghana, right? And what that requirement means is that fund managers, mostly local, but some international, who are looking to raise from Ghanaian pension funds, need a local vehicle. And that is going to just force the sector here to be created. We are running a little bit uphill because I don't think we have the policy support that is required, and things are being done out of necessity. But if policy were to support it, local pension funds and local pools of capital could really accelerate this conversation. Just to give you an example, we're working with a fund manager who's putting together a number of alternative investment vehicles for us. There are 4 of them. Each one of them requires 5 directors, and 5 directors have to be different, right? So we're looking for 20 people to sit on the governance of funds that are essentially tiny, because Ghana is a small country, despite loud noise. So that's just a difficulty that is unnecessary, right? There's so many opportunities for us to make these things really easy. And if not for anything, it can support in each country a developing fund management system where they don't need to go chase the large guys outside, but they can depend on increasing pools of domestic capital to make a difference in their countries.
That's great. Really insightful. Mercy, I'm going to put a question that's come from the audience to you. Given your work in financial inclusion and supporting African investment ecosystems, what policy or regulatory changes do you think could make the biggest difference in encouraging funds to domicile locally? From what you've seen, which approaches have been the most effective in overcoming real-world barriers?
Wow, that's a very loaded question, so I'll try to answer it. I think from the regulatory perspective, really, if you look at the legal frameworks, there's a need for predictability. If an investor is not sure which way things will swing when he needs to rely on the legal framework, then they become very nervous. So that predictability definitely does build the investor confidence. And if you look at the tax side of things, also that needs to be more stable. And it also on the tax side, you get your incentives from there. Actually, why a lot of these IVs domicile outside the continent, besides just pursuing the capital, is because of the incentives, some of these incentives, So how do we build in some of these incentives? And one of them is tax, really. And the double taxation treaty is one of them. And I know Rwanda is really working on that with a lot of jurisdictions. I think you have a plan of 30 double tax treaties by 2030. I don't know how far you've gone, Jean-Marie, on that. And then just generally what we've been talking about, just that administrative burden. We talked about capacity building being a gap that needs to be addressed, because also it helps with the cost elements. And it's also back to the stuff that everybody's talking about here. Wale talked, I think, fourth fund in Nigeria. I think a lot of these things are a function of time, but what we're talking about here, we've seen opportunities where we can leapfrog that time and make things work faster, where you don't have to wait for your fourth fund to domicile in the continent, but it can be the first fund, and really reshaping how we look at investments in the continent and fast tapping into home capital, because it's there. You've heard about the $2 trillion that's resting mainly in treasuries. How do we unlock a portion of that? 10% of, let me do the math. 10% of that is $200 billion. The gap is 300. You already addressed over 80% of that gap if you can just unlock 10%. So it's a question of everybody leaning in, understanding this challenge, but most important, the opportunities and tapping into these opportunities. And when I look at perhaps more of the international investors, they are investing in the continent. There's a reason why they invest in the continent, as much as perhaps they're not domiciling in the continent. Now, how do you bring it a notch higher and encourage them to domicile in the continent? And one of the incentives for them is to really that blended capital with the local capital, which we've talked about. It is available, but first we need to unlock it and then blend it up with international capital. Yes, so that's some of the things that I can think about, and happy for anybody else to chime in.
Mame, I might invite you to chime into that question. I just want to note there, we have a tsunami of questions, which is so encouraging for those of us involved and to see your enthusiasm. But unfortunately, we're not going to be able to answer them all here, but we will have a Q&A written up and made available. So we're going to receive all the questions and then post them to you. So just want to say this really represents, a vital source of feedback. Mame, anything you want to add to that? And then I want to put up the final poll so we have enough time to wrap up.
I think Mercy covered it greatly. But just to add that, there is a lot of growing opportunity, and I've seen so many innovative fund structures coming up, and there's a lot of hope that as we grow the ecosystem, we'll see the results that we need to see.
Terrific. So why don't we put up, I'll ask the technical team to put up the final poll. And then as we're doing that, I want to do a quick fire round for each of you, and maybe start with you, Jean-Marie. And the quick fire question is really one concrete action stakeholders listening today should prioritize to advance this important topic of African domiciliation.
Only one?
All right, you can maybe have two, but but what's the top priority?
I think from KFC perspective, we want to see more, I'd say, collaboration between I would say African jurisdictions, right? We have started working on this already. We we want to see, what is going on, for example, in Europe. If, for example, you are registered in the country, we can operate in different countries. So they call it passporting license.
Yeah.
So why don't we, apply or try to at least to also kind of open up to other jurisdiction. So, for example, we have signed last, I think it was in early this year, in February, we signed with Ghana, what we call passporting license for fintech, for regulated fintech. Specifically on those who are into a payment system provider. So we can, as we speak now, a fintech that is rated in Rwanda can go and kind of apply for approval in a very streamlined process in Ghana and start operating, and vice versa. So can we think of expanding this type of framework to other regulated entities with other jurisdiction? We believe so. And we are trying to engage on a bilateral basis with other jurisdiction. Another, I think, Mercy mentioned it, and she was actually asking me in terms of tax treaties. I have replied in the chat, but we have so far 19 treaties in place. In the last 3 years, we signed 12. So we are moving from 7 to 19. So we signed 12 in the last 3 years. Last one was with Nigeria in June. And next week, we are going to sign with Hong Kong. So, but as we speak, I think there's one pending with Ghana. There is one pending with Ethiopia. So we really need to, I think, to work as a continent to come together to remove those type of frictions. And for those ones, I think we really it's on us, right? It's on our government to come together and try to move, and we can move fast, as I was mentioning, because this one you can't blame anyone. It's just between us, between the government coming together and decide, look, can we open our market to our brothers and sisters, and and then move forward. So I would say those two things that we want to read to continue and to lead as a jurisdiction. Thank you.
Thank you, Jean-Marie. And as a leader in the developing jurisdiction, you have more time than the others. We're going to have to be really short because we got 1 minute. So one concept, one concrete action. Kofi, Wale, Mercy, and Mame, I'm not going to ask you because you're an author of the report and you know better. Kofi.
One concrete action for me.
One concrete action.
It's the coordinated policy initiative. It's in each country. Every arm of government deciding that the ability for us to fund things, particularly domestically, is extremely important. In most countries in Africa right now, the capital is available. We should make it really easy for the capital to be put to work for the benefit of the people of the country. And right now, I think there's still significant challenges around that. If all we do is make this clear to policymakers in each of the countries that we have identified, for them to start acting, I think would have done something significant. Then Mercy can bring her capital and add it to ours.
Wale.
Yeah, so I think it's a collaboration with large pools of capital globally. So I've coined a term called RIM, which is replacement income model. Mercy was talking about earlier how all of our pension funds have a lot of assets that are invested in treasuries and not invested in the real economies right now. But what I have had conversations with folks that manage those pools of capital, and if we can replace the return they get from those treasuries with annually for them, that pool of capital that they invest in treasuries can be invested in the real economies and with first-time fund managers going forward. And along with that, then dictate that those funds be domiciled locally. I think that could be a very quick way, really, to increase local domiciliation. Thank you.
And Mercy, very quickly, because I see Elias is ready to jump back on.
Sure, Diana. Mine is one, the regulators, really appealing to the regulators to enforce, because a lot of these regulations are in place. I think what's lacking is the enforcement, especially, with the pension funds. The regulation is in place. I'm not sure why they're not allocating the capital, but of course they have to provide also incentives. And this is linked to a point Kofi put out there. As the Mastercard Foundation, we have set up the fund of funds. We are de-risking a lot of this capital. The other appeal is to other philanthropic institutions to do the same, because there's still a bit of a long runway that we do have. So a bit of de-risking is still needed. And my appeal, and Dorothy will echo with that, is to really crowd in more capital into the Africa Growth Fund or set up similar initiatives for de-risking and to incentivize. Thank you.
Thank you all so much. Clearly, the vitality of this topic has been demonstrated today. Elias, let me pass it over to you. And I want to make sure that everybody knows about the in-country roundtables and policy webinars that we'll be having over the next several months, and really to create the conditions to deal and bring solutions to this. So, Elias, back to you. Thank you.
Thank you very much, Diana and panel. There is no doubt that if somebody had money to buy more time, would allow for this discussion to go on. It was truly seminal. It felt like a thorough introspection by the continent. And I really wish that we could have had more time for this. There's somebody who said something to the effect that we should never have such a webinar again on the continent. And I would put my support to that. And we can only avoid that if we put our shoulders to the wheel, and it's in our hands. Thank you very much to the panel. At this stage, I would like to bring back Dorothy. Dorothy is going to give us the marching orders as to what we should expect next. As the Impact Task Force report says to the world, it is time to deliver. I'm hoping that Dorothy is going to tell us exactly what to deliver. Dorothy, you have the floor.
No, thank you so much, Elias. Thank you, Diana. Thank you to all our panelists. When I started and I opened up this webinar, I said, this is a call to action. There's so much that has been said. I'm not going to repeat it. We need to build that infrastructure, and we're going out to continue working, because whilst we launched last year at Super Return, work has been going on. So I want to say, without repeating, everybody has heard that there's some key words that came out. I heard infrastructure. I heard long-term play. I heard, the fact collaboration, coordination. It's industry ecosystem build. We even need to go and do some backward integration, look at our education system, because we need to have, fund management expertise. We need to have fund accounting expertise, fund legal expertise. I wouldn't go through all of that. But what I want to say, and the promise, is that we need everybody who is on this webinar, those who may not have been able to join this webinar, that it's going to take a joint effort for us to work. The capital that we have, within the Mastercard Foundation African Growth Fund, it's just the tip of the iceberg. We need to crowd in and mobilize more capital. So it's not just enough to get capital, as Wale said, from one place to the entrepreneurs. We have to build that infrastructure in between. This is what this is all about. And absolutely agree, we shouldn't be having these kinds of webinars anymore. We should be telling the story, how we're building it one piece at a time. We're going to work really hard as we move forward. Jean-Marie knows we're very invested in working with the Kigali International Financial Center to make sure that, we accompany you in that journey. We want that. It's not only Casablanca, it's not only Mauritius. Lagos, we hear you loud and clear. Ghana, we're hearing you. Ethiopia, we're hearing you. So my word to everybody is just a big word of thanks, a big word of that. Let's do this together. Please do not hesitate. If they have any ideas, Wale, I had RIM. I'll be coming back to explore that with you, because it really says it all. If we can get those local pension funds and give them the kinds of returns that they get in other markets, there's no reason why they shouldn't put their monies into the real economy. So a big word of thanks to everybody, and that look forward to seeing you in Cape Town, look forward to seeing you at the different roundtables. And I believe, Elias, that information will be made public through various different channels. So thank you. And again, to the entire collaborative that's doing this work and everything, Diane, everybody behind you. And so I want to say a big thank you. So thank you all for joining, and we're really, really grateful for your input and for your questions. So over to you, Elias.
Thank you. Thank you very much, Dorothy. We owe everything that has happened today and the wisdom that has come up and the expectations that have been generated entirely to you. It gives me the pleasure to bring this historic event to a halt, and I have no doubt that everybody has benefited from being a part of it. And as I close the webinar, I would also like to thank the Africa Impact Investing Group, who have been active in curating continental ecosystems to making sure that impact players get involved and make it possible to deliver the dream that we have painted today. Thank you very much to everybody.